insurance companies fail is very, very important. But not only is it important that we in fact maintain the safety net, it's important that we make sure that people understand that the safety net is there, so that people in this economic crisis do not get panicked into making hasty and poor decisions. They don't get panicked into selling insurance policies when they shouldn't. They don't get panicked into selling them, for, in some cases, for cents on the dollar in unscrupulous schemes. They don't get panicked into cashing those policies out. Because not only does that hurt individual policyholders, but it undercuts the basic foundations of the industry that all of us are working in. Let me turn with that in mind and with the importance of transparency, the importance of the safety net in mind, to AIG. Because I think that when we look back at what happened with AIG in the CDS market several years from now, we will see that lack of transparency here, this is an excellent example of the problems of lack of transparency. And I think we got hurt by lack of transparency here in three ways, all of which are going to have to be addressed. First, the CDS market itself had no real transparency. I think it's clear that most people didn't understand how it worked. In fact, it's now appearing that many of the people buying the stuff didn't know how it worked. The wisdom, by the way, of buying things when you don't know how they work is probably a longer subject for a different seminar. But even so, the problem is when we hit a speed bump, when the CDS market began to have problems because it was so opaque, it was very, very difficult, if not impossible, to begin to sort it out. There was no way, for example, to get everybody in a room and say, okay, here are the CDSs, here's who owns what, and sort that out. And the inability of regulators, of private business folks, of all the people involved, to sit down in a room, sort it out, and figure out who owned what, made it virtually impossible when it began to unravel for there to be any kind of organized, rational solution. So that's one way in which the transparency hurt us. The second involves AIG itself. There was no good transparency of AIG's operations. And let's remember that we're really talking here about the holding company. In fact, it's worth mentioning that the state regulatory systems of the insurance companies actually worked. The crisis was all about the parent company at the top. The insurance companies were all, nobody was panicked about them. They were all functioning fine. The state regulation here, because there's been a lot of discussion about state regulation, actually worked. But there was no real transparency about AIG's operations. When we started this, you'll all recall, there was a proposal, in fact, to have the insurance companies that were fine loan something like $20 billion to AIG to get them through their liquidity crisis. Well, we then quickly learned that $20 billion was a drop in the bucket, wasn't what we needed. We needed $85 billion. And $85 billion increased and increased, and we're now up to, I think, $153 billion. And I doubt there's anybody in this room who would be prepared to bet a substantial portion of next year's salary that that number won't go up again. Although if there is, we can chat about it later. And the problem here has been, for those of us in the business of dealing with this, it's one thing, as we've learned in another context I'll talk about in a minute, it's one thing to go to the financial community, to the government, to the regulatory community and say, look, we have a problem, it is going to cost X dollars to solve the problem. You got to pay for it. People may object, nobody likes to pay out the money, but reasonable business people, reasonable government officials can budget for these things. You can say, I have a problem, it's going to cost X to solve it, profits will be down next year, but it's solved. When you have a constantly increasing bar, when you have a fear that if I put money in now, I'm only going to be putting more money in later, it makes it very, very hard, and I think this is what we've seen, to organize a general community to step in and solve these problems. And so again, the lack of transparency, the lack of good information about what's it really going to cost when all is said and done, has made it very, very hard to organize the CDS rescue, the AIG rescue. And the last point is, because of the lack of transparency, we have huge numbers of policyholders being left in the dark. Most of AIG's insurance subsidiaries are in fine shape, and yet folks like me and my agency and lots of other people in similar agencies are having to spend a lot of time convincing folks of this fact, convincing folks of the safety nets, so that we don't have a functioning run on the bank. We don't have people racing in to cash in policies, not because their insurance company is in danger, but because all they're reading about is AIG the parent. And so I think as we begin to look at legislative, regulatory, and other solutions to this crisis, what we're going to see is that transparency in all these ways is a key to dealing with it.